Good morning. The multifamily supply shock that's hitting Houston right now. And Houston is entering one of the most significant multifamily supply cycles in its history. And for investors, this is not just a headline, it's a strategic inflection point. So if you're underwriting deals, raising capital, or evaluating acquisitions in KD, Fulshire, or the broader Houston MSA, this is the moment where discipline beats optimism. So, what's going on right now? What's driving this supply shock? So, over the past 24 to 36 months, 2 to 3 years, Houston has seen a surge in multifamily development, and that's largely been driven by population growth. Over 120,000 net new residents annually are added, but also strong job creation across energy, healthcare, and logistics. And institutional capital is chasing Sunbelt yield, and the result was record deliveries hitting the market simultaneously. And this isn't gradual increase, it's a wave. So what the data is telling us is that tens of thousands of new units delivered in 25 and 26. And vacancy rates are rising across Class A assets. And rent growth is turning negative in many submarkets. And concessions, say 1 to 2 months of free rent, are becoming more standard. And operators are no longer pricing for growth, they're pricing for occupancy survival. So, why this matters for investors right now. And this is where most investors can get it wrong. They underwrite based on yesterday's rent comps. But today's reality is that NOI is compressing and exit cap rates are expanding. But also, refinancing risk is increasing. So, if you're not adjusting your assumptions, you're not underwriting, you're guessing. So let's take a look at this from a lender's perspective. And this is a critical insight that we want to talk about. And lenders currently are adjusting underwriting rents, being a little bit more conservative. They're also assuming higher expense assumptions, but also increasing reserve requirements. So think 6 to 12 months is a mandatory minimum nowadays, and they're more conservative with DSCR thresholds. So even if your deal looks good on paper, it may not pass a lender stress test. So another thought is that Houston is not just one market because of the size of it. There's a lot of markets, and that's where local expertise matters. Different submarkets are reacting differently. So let's look at some stronger areas like Katy and Fulshire, where we have large population driven demand, but also West Houston corridors near the energy corridor and suburban growth nodes are tied to rooftops. So some weaker areas could be some urban core class A, where there's just oversupply with high density luxury developments, but also areas with heavy new delivery. A lot of concentration there is causing difficulty. So the translation is micro market selection matters more than ever. But where the opportunity is, every supply shock creates opportunity if you know where to look. So, distressed or motivated sellers. If owners are facing refinancing pressure from their loans, or they have bridge loan maturities coming due, or if they have capital calls creating forced sells. Two, value add at a discount. If you're able to buy below replacement cost of something existing and then stabilize through operational efficiency, and then refinance when the market normalizes, that's a good play. Three is a long term hold strategy. With Houston's population growth still intact, demand will eventually absorb the supply shock that the oversupply right now, and timing matters more than ever. So, some strategic takeaways are if you're a serious investor and you're serious about investing in multifamily in Houston, underwrite forward looking rents and not trailing comps, but assume higher exit cap rates and build in reserves and liquidity buffers. And focus on submarket fundamentals, not general Houston headlines. So think like an investor. Here's the final thought for the day that Houston multifamily market isn't broken, it's just resetting. And resets or smart capital positions itself to take advantage. And the question right now is now a bad time to invest? The real question is, are you structured correctly to take advantage of the times right now? And that, my friends, is it for the day. Please visit my website, HoustonRealEstateBrokerage.com, to figure out how to get a hold of me. Love to talk to you more. My website is HoustonRealEstateBrokerage.com. Please visit there, schedule a consultation, and we can chat more. Take care.